Hello traders, the title of this video is how to trade FX and Australian dollar, New Zealand dollar using key levels alone. Let's get started. We are on the monthly chart. We can see that the current market pattern for the Australian dollar, New Zealand dollar is a consolidation. As you can see, the price consolidating between the level of 107.46 and the level of 103.50. So the market pattern will determine the appropriate trading strategy that we must deploy. Considering the current market pattern, professional will give priority to bearish signal near the level of 107.46 if the price is rising up to that key levels. So as you can see, the price now approaching 107.46. Those who bought it at the lower part of the consolidation will be prepared to take profit here. So as a day trader or swing trader, we will be looking for bearish trading setup in the vicinity of 107.46 key levels. Alright. However, if the price is going down from the upper side of the consolidation to the lower side, if the price, as you can see here, it went down, so price going down. Okay, so if they sell it here, it's going down, it reaches the lower part of the consolidation. The appropriate strategy is to look for bullish trading setup near the lower part of the consolidation. Once identified, okay, a valid trading setup, one will implement a top-down trading method, okay, to trade it. This is what has happened here. You can see that we have also a bullish candlestick pattern here. You see those are two candlestick bar here. Those are bullish candlestick pattern in the vicinity of the lower part of the consolidation. After that, after this candle is closed, the bullish candlestick pattern is completed at the lower part of the consolidation. Trader implemented, okay, a top-down trading method or a multiple-time trading method to buy. So now the price going up in the month of February. Now we reach the top. We use the inverted, okay, the inverse strategy. So if I go back now to the weekly chart, very simple. In fact, professional traders like to trade consolidation a lot. If you are a swing trader, look for consolidations. All right, those are the easiest, okay, trading setup for a swing trader. So they swing it from here to the upper side. You see here. So they are swinging it from the lower part to the upper side, and they swing it down again. Now they are swinging again up. This is the origin of swing trading. All right, are you a swing trader? So look for consolidations, the easiest, okay, trading setup for, all right, swing traders. So talking about how to trade FX or Australian dollar, New Zealand dollar, using the key levels alone. The consolidation, we need to pay attention to the upper side and the lower part of the consolidation. So now, as you can see, we are now, I'm switching now to the weekly chart. And you can see that as the price approaching the upper side of the consolidation, you can see this candle here. See that candlestick bar? Okay. Once it's closed, we will monitor the next candlestick bar, and we will be looking for bearish trading setup. Doesn't mean that the price will definitely come down, but it just means that the appropriate strategy one should deploy, which means priority to bearish trading setup below the key level 107.46. If it breaks above that level, right, if you push it through, breaks above, retests, and turn around, find a support, or we have a valid bullish trading setup after a break above that level, then we'll be prepared to buy it. We will be giving priority to bullish signal above 107.46 if the price breaks above and find a support, or we see a higher low or a bullish candlestick pattern above 10746, or a bullish chart pattern, all right, above that level. This is how one can trade the Australian dollar, New Zealand dollar, using key levels alone. So this is what's going on now. All right. So apart from the consolidation, I have two more key levels that I want to give you. All right. All right. The first key level is the long-term equilibrium price level. So the first long-term equilibrium price level for the Australian dollar, New Zealand dollar is at 105.02. We must watch that level throughout 2017, not for 1 month, for the whole year. Doesn't mean that, okay, we just trade around it, but we are looking for trading setup if there is a trading setup around that key level. So usually the market will become bullish above the long-term equilibrium price level, but the current market pattern will determine the appropriate strategies. Though it's above the long-term equilibrium price level, the current market pattern is telling us that George, prior to bearish signal below 10746, and prior to bullish signal, if it's going down and reaches the level of 10350, all right, as you can see here, one more thing I need to mention to traders on the monthly chart, trading the Australian dollar, New Zealand dollar, using key levels alone, we also see, you see here, so what do we look for around support level? We are looking for bullish chart pattern, bullish candlestick pattern. We are looking for bearish chart pattern near resistance level. All right. We are looking for bearish candlestick pattern near a resistance. So price must go up first before reaching the resistance. Then we are looking for bearish trading setup, bearish candlestick pattern. So as you can see here on the monthly chart, what I want to say is that we have also a double bottom chart pattern near the level of 10350. So not only we have here a bullish candlestick pattern, price goes down from this doji, this two inverted hammer here, all right. Not only that, we have also a double bottom chart pattern. As I was telling you now, the level of 10746, which is the top of the current market pattern, is also corresponding to the neckline of this double bottom chart pattern. So for a double bottom chart pattern to become truly bullish, the price must break above what? The nut, or above the neckline. Here it is. So far, it's still below the neckline of this double bottom chart pattern on the monthly chart. So as I was telling swing traders that your favorite trading setup is consolidation. All right, easiest one, in fact. All right. There is another trading setup for swing trader is the double bottom chart pattern on the monthly chart. This is one here, double bottom or double top on the monthly chart. For the bearish trading setup, double top or double bottom on the monthly chart, and also the consolidation pattern. All right. Remember, we are look for chart pattern, look for candlestick pattern. So I've been posting some video at Day Pro Trader YouTube channel about candlestick pattern. So if you want to know more about candlestick pattern trading, subscribe to Day Pro Traders YouTube channel. All right. So the long-term equilibrium price level is at 10502. I need to remind the traders that in this case, the current short-term equilibrium price level is also equal to the long-term equilibrium price level. It doesn't happen very often, but sometimes when the price is consolidating, you may see that the long-term equilibrium price level is equal to the short-term equilibrium price level. So for the Australian dollar, New Zealand dollar currency pair, using the key level alone, it happened to be that the current short-term equilibrium price level is also equal to the long-term equilibrium price level at 10502. All right? So the trading drill, so you may say, George, this video is not telling me anything. But traders have been following us, understand what I'm trying to do here. We have a trading drill that we follow. Look for a high probability trading setup on a higher time frame. Validate that trading setup. All right? And then what? Implement a top-down trading method without violating the trading triangle. Okay, and when everything is ready and cook and nice, enter the trade at a low risk entry point. This is the trading drill that we follow all the time. So, but apart from the trading drill, we do not want to, okay, violate the current market pattern. So, before you even start implementing the trading drill, ask yourself, what is the current market pattern? One more thing before I close this video, especially for forex traders, because I've said this before, and I mean it, all right, is that if you are trading forex, all right, and you do not pay attention to the economy news, it's better not to trade forex at all. Now, I mean it. Some traders may say, George, I don't give a damn about it, but all right, that's up to you. It's your decision. But the point I'm making is that in the forex market, if you are trading forex, all right, in the forex market, there are economy news all over the world. In New Zealand, in Australia, all right, in United Kingdom, United States, in China, the economy news are popping out everywhere. Not only that, sometimes the market is also looking ahead. Before the economy news is released, the forex market is adjusting itself before the economy news. Decisions are made, portfolio are managed carefully before the economy news is released. So it's not about the economy news that is released today or released now, but it's also about economy news that are about to be released in few days. So traders say, George, you repeat yourself so much. George, you talk so much, blah, 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 blah. Good, but I prefer to be honest with traders straight away so they may know exactly what they are getting into, so that they may avoid losing money in the long run, because you can start losing money gradually, and by the time you know, you have wasted a big chunk of your money, and you're looking back, you say, how stupid I was, and I don't want you to do that. So you may start planning today. Is forex for me or not? Is the stock market for me or not? All right. Which trading, okay, tool should I use? Should I trade binary betting? Should I use CFD? Should I use spread betting? All right. And then you take it from there. All right. So enough of my blah, blah, blah. This is about how to trade FX and Australian and New Zealand dollar using key levels alone. We are looking at the key level 10746, key level 10350, and the long-term and short-term equilibrium price level at 10502. If you have any question or suggestion, put in the comment section. In due course, I will be recording another video to answer your specific question. Happy trading to you all, and speak to you soon. We are the TSTW24 traders, talking about how to trade FX and Australian and New Zealand dollar using key levels alone. Speak to you soon.